Now speaking, Peter Lowry, Vice President, Investor Relations. On today's call, Domo CEO Josh James and CFO David Jolley discuss forward-looking statements related to the company's business under federal securities laws. This included projections for cash requirements, pricing strategies, product adoption, and product impact, expectations for their sales team and new business opportunities and initiatives, the potential of AI and its impact on their business, and the impact of macroeconomic and other conditions on their business. These statements are subject to risks, uncertainties, and assumptions. Additionally, non-GAAP financial measures were discussed, such as revenue, as supplemental measures of Domo's performance. Now speaking, Josh James, Founder and Chief Executive Officer. In Q1, Domo saw total revenue growth of 7%, subscription growth of 10%, and billings declined by 4%. CEO Josh James has made customer focus, pricing and go-to-market strategies, and an aligned and motivate sales force as top priorities for getting back to growth. These initiatives have already seen success in the form of new logo wins from customers who needed to combine disparate data sources or replace existing competitors. Additionally, the company has seen increased adoption in upsells due to its consumption pricing model. In terms of product updates, Domo launched a variety of new features that make it easier to integrate data, create content, drive action, and expand their impact on the business, including Jupyter Workspaces, Microsoft Office Suite integration, and variable solutions. This is also earning recognition from industry analysts, with Domo being named a leader in the Nucleus Research 2023 Analytics Technology Value Matrix for the third consecutive year and the #1 vendor in the Dresner Advisory Services 2023 Cloud Computing and Buy Market Study. Finally, Domo announced its AI service layer, which will be available in June and offers customers control over which models are used, how and when. Now speaking, David Jolley, Chief Financial Officer. Domo posted 10% subscription revenue growth and 7% total revenue growth in Q1. Billings decreased slightly year-over-year from $74.3 million to $70.3 million, while RPO grew 6% to $237.5 million and total RPO grew 1% to $356.7 million. The majority of customers are now in multi-year contracts, 65%, gross retention is close to 90%, and net retention was just above 100%. Excluding foreign currency fluctuations, NRR would have been 2% higher. Q1 total revenue was $79.5 million, with international revenue representing 21%. Subscription gross margin was 85.9%, up 1.3 percentage points from Q1 of last year and up 0.3 percentage points from Q4. Non-GAAP operating margin was up 2.7 percentage points from a year ago. Net loss was $6.1 million, down from $7.6 million a year ago, and net loss per share was 0.17. Cash provided by operations was $800,000 and the cash balance declined just $0.5 million from last quarter to $66 million. For Q2, Domo is guiding to billings of about $69 million to $70 million, which is relatively flat sequentially, consistent with past trends, and down 5% year-over-year. Full-year billings growth is expected to be in the range of $335 million to $353 million, representing a range of 4% to 9% growth. For the second quarter of FY 2024, GAAP revenue is expected to be in the range of $78.5 million to $79.5 million and non-GAAP net loss per share, basic and diluted, is expected to be between 7 cents and 11 cents. For the full year of fiscal 24, GAAP revenue is expected to be in the range of $323 million to $330 million, representing year-over-year growth of 5% to 7%. Non-GAAP net loss per share, basic and diluted, is expected to be in the range of 27 cents to 39 cents. Domo expects to achieve a positive operating margin in Q2 and for the full year. Cowen and Company analyst Derek Wood inquired, Josh, could you provide an overview of your efforts to rebuild the large deal pipeline? What does this entail and how do you expect it to result in closed deals in the quarters ahead? Cowen and Company analyst Derek Wood inquired, Josh, could you tell us more about the initiatives you are taking to build up large deal pipelines? What kind of efforts are you making to re-engage with existing customers and acquire new prospects, and when do you expect these initiatives to start paying off? Josh James replied, thank you for your question. We have been actively engaging with customers and prospects to re-engage the sales force. This has resulted in an increased pipeline for the enterprise business that could lead to monetary results this quarter, as well as the next 2 quarters. Our customers trust us to provide cost savings and revenue opportunities, which allows us to quickly move forward on projects intra-quarter. Cowen and Company analyst Derek Wood inquired, "Can you discuss the extent of your consumption push, how customers will be transitioned to it, and whether there are opportunities to monetize through generative AI?" Josh James replied, "In response to the question, I can confirm that our change in pricing structure is allowing us to be more consultative with our customers. We are now able to provide them with flexibility and access to our products and services on an as-needed basis, rather than limiting them to a static number of seats. This approach has resulted in a take rate that is more than double that of our traditional user-based licensing customers. Additionally, we are seeing higher contract values from our consumption model after 12 months compared to the traditional user-based licensing. These results demonstrate the value of our new pricing method and its effectiveness in helping our customers." David Jolly replied, "For sure. Our platform has a lot of functionality, but the traditional approach of charging per seat made it difficult for customers to explore and experiment without getting approval first. But with our new consumption model, they can explore and try out services for the day or 2 days they need them. We've seen a take rate that's more than double from our consumption customers compared to regular customers since they've only been with us for 1 year. Plus, we don't have to limit ourselves to use cases that have been previously approved for purchase. We're seeing higher contract values after 12 months with our consumption model versus user-based licensing. This allows us to have more meaningful relationships with customers and more opportunities for growth." Morgan Stanley analyst Theo Thun inquired, "How are you strategically approaching partnerships for AI going forward, and what have you observed from customers in terms of reactions to the environment today?" Josh James replied, "Domo has the most integrated data stack in existence, allowing customers to leverage data with AI. We provide an agnostic platform for integrating with specialized AI models, such as those related to pricing, supply chain optimization and more, so customers can get the most out of their data. Our metadata about the data gives customers a distinct advantage when it comes to utilizing AI. We're excited to see how our customers take advantage of the unique capabilities we offer." JMP Securities analyst Owen Hobbs inquired, "Owen Hobbs here. Could you provide some insight into the demand for your product across different geographies?" David Jolly replied, "The biggest thing we've seen is that deals are still getting done, but only if there's an established relationship with the customer. Cold calls trying to create a project from scratch are almost impossible right now. Our international presence has been successful in Japan, where we made investments early, and the rest of our geos focus on customers we have references or relationships with. The number one type of new deal for us is customers who were users at one of our previous customers and call us for the same solution." JMP Securities analyst Owen Hobbs inquired, "Josh, what were your expectations for the quarter and how did the company's performance compare?" Josh James replied, "I think overall, our approach is to play the hand that we have been dealt. We're looking to optimize our current performance to hit our goals and build confidence internally and externally. We're taking advantage of opportunities such as consumption in AI that will help us move more quickly with our data platform and experience. We're excited about what the future holds." Lake Street Capital Markets analyst Eric Martinuzzi inquired, "Can you confirm the billing guide for Q2 is 69 to 70 million? Lake Street Capital Markets analyst Eric Martinuzzi inquired, "What gives you the confidence to reiterate your full-year outlook given the current Q2 billings outlook?" David Jolly replied, "Our historical results show that Q1 and Q2 of each year have been relatively consistent from a billing standpoint. We do see some seasonality in buying patterns, but this year we are expecting an additional increase due to the additional sales reps we added in the third and fourth quarter of last year. It takes time for these reps to be fully ramped up, which is why we anticipate an acceleration of activity during Q3 and Q4 as they become more familiar with our products, offerings, and accounts." Lake Street Capital Markets analyst Eric Martinuzzi inquired, "Josh, what changes have been made in sales management since the CRO was hired 90 days ago?" Josh James replied, "Jeff is a well-known and respected member of the team, having had relationships with many colleagues prior. His arrival has created an atmosphere of enthusiasm and camaraderie that has been unprecedented in the 13 years since the company's inception. With the high expectations and rigorous methods he brings to the team, along with his managerial staff and new additions, the organization is more unified than ever before. AI, consumption, customer success, and upsells are driving excitement and creating rewarding job opportunities for reps, making the future look bright." Lake Street Capital Markets analyst Eric Martinuzzi inquired, Question, what are the expectations for total headcount and ramped sales capacity in Q1? David Jolly replied, Yeah, I think we're in a really good spot. Yes, the new hires are performing well and there has been no regrettable turnover in Q1. Our QBRs have provided great insights into the experiences of our reps, who are excited about the opportunities for new pricing models and AI. We're in a good spot. Josh James replied, "The new leadership team is a great asset to our organization. Mark Mon has been with us for a while and is highly respected. He now has more responsibility to show what he can do. Darren Thane was in charge of the product and Catherine took his place, but now he is back in that role, bringing a new style and energy that is invigorating. David Jolly is also new and Wendy is still relatively new. These individuals have brought a startup mentality to the company, despite having $300 million of recurring revenue and a strong customer base. We're optimistic about the future and believe that we can get back to growth if the macro environment improves."